So my dear friends, let's get back to now expenditure on scientific research. So we were doing PGBP and other areas were pending. So we will finish off PGBP in this session. So scientific research means what? Activities for the extension of knowledge in the fields of natural or applied sciences, my dear friends. Earlier there were used to be different percentages of deductions. So basically, in order to support Indian companies and companies from, what do you say, you're investing more and more in scientific research, there are many areas. One part of it is in-house research. Second part of it is donation to a company which is doing scientific research. Third one is statistical research, etc. So the entire section is divided into three parts. So basically the entire section can be divided into, one is donation, second one is what happens if the scientific research asset is already sold off somewhere, what to do. As far as donation is concerned, that can be divided into three parts. One is in-house research. So if a company wants to invest money for their own research, so will that be taken into account? That is one. Second part of the story is, what if the company wants to donate to some other company which is into biotech or which is into manufacturing? And the third one is other areas. If I simply want to donate to other statistical research, Indian Institute of Sciences, Indian Institute of Technology, in all these cases, what will happen? So let's do one by one. First one is the deduction. Expenditure incurred by the SSC for own business. It is coming in 3511 and 3514. No need to remember the section number whatsoever. Now, in-house research divided into two parts here again. One is research prior to 3 years of commencement of business. One more is research during business. Research prior to 3 years of commencement of business is what? One is revenue expenditure, one is capital expenditure. So revenue expenditure, you have purchase of raw material, 100% deduction. Salary to employees, 100% deduction, and others, no deduction. Mind you guys, these are all revenue expenditure. Apart from purchase of raw material and apart from salary to employees, nothing is allowed until the business is commenced. So anything prior 3 years to the commencement of business, revenue expenditure, what all is allowed? Only you have purchase of raw material, then you have salary to employees, 100% deduction. Others, absolutely no deduction. On the other hand, CapEx, capital expenditure, mind you, on land, there is absolutely no deduction on land. No deduction on land, and other cases, all others will be, all other revenue expenditure will be allowed. Anyway, we will see that later. But revenue expenditure here, I'm talking about, after the research commences. Okay, after the research commences. But here we are only talking about capital expenditure. Okay, capital expenditure, land, no deduction. Other capital expenditure, my dear friends, 100% deduction you will get. So very simple. Research prior to 3 years of commencement of business, what all revenue expenditure you will get? Only two things. Purchase of raw material. Second one, salary to employees. Full 100% deduction you will get. Sir, will you get before the commencement only? No. It is only allowed from the year of commencement. But the expenses you can take prior. So if purchase of raw material was 10 crore. Salary to employees was 5 crore. Other admin expenses was 2 crore. These admin expenses are never allowed. These 215 crores is fully allowed, 100% deduction. But when is it allowed? Is it allowed previously 2 years ago only? No, it is allowed from the year when you commence the business. Okay. On the other hand, capital expenses. You have bought land 3 years ago. Will it be allowed? No. You bought land 1 year ago. Is it allowed? No. Will you? You have bought plant and machinery. Is it allowed? Yes. All capital expenditure except land, because land is a non-depreciable asset. Either way, depreciation is not allowed anyway. So here also in scientific research, once the entire capital expenditure is allowed to be debited to P&L account, there is no depreciation. Land, on the other hand, anyway it is not allowed. Depreciation is not allowed on land anyway. Hence, on land also there would absolutely be no deduction. Capital expenditure, land, no deduction. Others, 100% deduction. Research during the business, my dear friends, during the business. Revenue expenditure, you have 100% deduction. And capital expenditure on land, there is no deduction. Again, on others, 100% deduction. My dear friends, important to know, research during the business, you will get deduction for raw material also. You will get deduction for salary to employees also. And you will get deduction for everything and everything that is related to the business. All revenue expenditure will be allowed as usual. But Capex, again, land is not allowed. So it's interesting to note that this is the same here. Only thing that changes research prior to 3 years before and also during business would be the revenue expenditure. And research prior to 3 years of commencement of business, when will you get the deduction? Allowed as the deduction when? In the year of commencement. In the year of commencement. Very, very simple. So if you see where an SSE commences business on 28/11/2020, then all the scientific research related revenue and capex incurred on or after 28/11/2020 as discussed above shall be allowed as deduction. Further, any such expenditure from 28/11/17 to 27/11/2020 beginning 3 years immediately preceding shall also be allowed as deduction from the year in which the business commences, that is in the financial year 2021. Salary does not include perquisite. Capital expenditure includes expenses incurred on acquisition of plant and machinery, construction of building, acquisition of vehicle, anything. But it should be used for, mind you, scientific research. If it's used for personal purposes, no, it should be used for scientific research. Now, that is one thing. Then, eventually, the other companies, initially they were only into biotech and chemical production, but other companies also told, we are also manufacturing many things, and I am into specified business. For me also, I need deduction. So, what they did was, they made a separate section 35(2)(ab), where they said, 100% deduction in relation to scientific research and expenditure, which is revenue in nature, and 100% deduction in relation to capital assets, except here it's interesting to know under 35(2)(ab), for specified business, land and building both are not allowed. Plant and machinery will be allowed, land and building will not be allowed. So what are the conditions here? Here SSE should be a company. For other than companies, they can go here. Here it is for all SSEs, mind you. These are the minute differences. For all SSEs, 35(1)(1). For company SSE, specified business, 35(2)(ab). So what should be the specified business? Deduction in case of company, in the case of biotech, or earlier it used to be chemicals and petroleum, etc. Now what have they done? Everybody is allowed in this. Manufacture of production of any article or thing other than 11th schedule. 11th schedule will have alcohol, then Ajay Devgan, Polo Zuba Kesri, tobacco, all those things. So Ajay Devgan and all, if you manufacture Vimal Pan Masala, can you take 35(2)(ab)? No. Research in the way to spit on your face, all that is not allowed, right? Yes. So manufacture or production of any article or thing other than those specified in 11th schedule. All PJs I am delivering, amazing PJs. Here, smile. If you don't smile, also cringe and then forget about it. Okay? Yes. As I told you earlier, there were 150% all given, guys. Now nothing. It's just 100%. In case of contribution to outside, see, one part was what? In-house research. In in-house research, what is allowed? Revenue expenditure before 3 years and after 3 years, everything is allowed. Before 3 years, only two things are allowed: plant and machinery, salary. Capital expenditure, whether it's before or after, land is anyway not allowed, others are allowed. But in 35(2)(ab), it is only for specified business and only for companies. And what is specified business? Biotech or any manufacturer. 100% is allowed. Revenue, everything is allowed. Capex, only acquisition of land and building. Correct? Yes, that's about it. Now, I am not a scientific research company. I don't do any scientific research, but I contribute to outside agencies. Can I do that? Yes. Whether you contribute to any research, whether I contribute to scientific research, whether I contribute to social science or statistical research, or whether I contribute to any national lab, university, Indian Institute of Technology, whatever I want, all the cases, 100% deduction I will get. University, college, anything. And guys, I need to, for these things, for research association, etc., I will have to prepare a statement under 10BD and furnish a certificate also under 10BE. Now in MCQ, they can ask you, if I don't furnish this statement, what will happen? Now if I don't furnish this statement, my dear friends, two other things will come. Though it should be taught in penalty, I always believe in not section-wise analysis, just like our cluster-wise analysis. So here we are doing the cluster of scientific research and everything related to scientific research. So that has to be discussed in entirety. So if you do not file the certificate or statement as discussed, 200 rupees per day to the extent of donation you have to pay. And if there's any failure to furnish proper statement, 10,000 rupees to 1 lakh rupees is your amount that you need to pay. So this is regarding the scientific research as such. Apart from that, they can ask you a question where I have a composite arrangement where land and building both are taken into account. So basically, I have what do you say, purchased both land and building. This is, for example, in 3511 only, land and building to the tune of 10 crore. What do? I should remove the land portion. How will I remove land portion? Purely by valuation. So I should get a valuation done and remove the portion of land there. Very simple. Today I have donated 3 crore to an organization which has been recognized. By the end of the year, when I am about to claim the deduction, that recognition given to that institution has been withdrawn. Will I get deduction? So there has been an explanation to 3513 which says SSE shall not be denied the deduction if the approval is granted which has been withdrawn at a later stage. And obviously, once you get a 100% deduction under 35, there is no depreciation deduction that you will be getting for sure. Unabsorbed capital expenditure under this section will be treated the same way. Anything unabsorbed capex. So basically, the profit of the company research organization was around 2 crore. But the unabsorbed capital expenditure is, basically capital expenditure is 4 crore. Profit is 2 crore. Capex is 4 crore. What is the absorbed portion? 2 crore can be absorbed. Remaining 2 crore cannot be absorbed. That unabsorbed capex is the same treatment as unabsorbed depreciation. It will be carried forward indefinitely. As far as amalgamation is concerned, the new company, amalgamated company, can avail the deduction. That's what it is. Now, what about AstraZeneca? AstraZeneca came up with the COVID vaccine. Bharat Biotech came out with Covaxin. All these cases, there would be some clinical drug trials before the entire vaccination. Obviously, there are a lot of drug trials. So, for drug and pharma companies, expenditure on scientific research shall include clinical drug trials as well. Now, they can ask you one additional thing in this is when you sell the asset, what will happen? Selling of a scientific research asset. This is what is going to happen, guys. Check it out. If it is sold from the lab, 3 things I can envision. 1, I will sell from the lab directly. 2nd, I will use it in the business and then sell it off. 3rd one, it was used earlier in the business and now it is shifted to scientific research. 3 things can happen. 1, the scientific research asset from the lab only I will sell it. 2nd, from the scientific research, I will first use it in the business and then I will sell it off. 3rd one, it was actually reverse case. It was actually used in business. Now I am bringing it into scientific research. Everything is covered here. If it is sold from the lab directly, 41.3 will apply. 41.3. That is deemed profit. What is the capital gains? If the sale price is more than the cost of the scientific research asset, then the additional balance will be the capital gain. This is as per the Artex manufacturing case law. For instance, if the scientific research asset was 10 crore, full deduction is taken 10 crore. It is sold for 14 crore now. Hence, that 14 crore minus 10 crore, 4 crore will now be capital gain. On the other hand, how much would be PGBP? PGBP is very simple. The selling price minus unamortized depreciation or unamortized cost. Selling price minus unamortized cost or deduction under section 35, whichever is less. So my dear friends, here there is nothing called unamortized here for scientific research, though the formula says so. There is nothing for scientific research here. Why? Because in PGBP, full amount anyway is taken as deduction. So is there any portion which is not left to be amortized? No. So in my example, what did I tell you? The scientific research asset was 10 crore. How much did it sell it for? 14 crore. So 14 minus 10, 4 crore is capital gain. Fair enough. What will be PGBP? See, 10 crore is already debited. 14 crore is credited. In that 14 crore, only 4 crore I am charging to tax as capital gain. What about PGBP income? PGBP income will be what? Selling price 14 crore or deduction under 3514. What is the deduction under 3514? Deduction under 3514 is 10 crore. Correct? Already taken deduction is 10 crore. So selling price 14 crore or deduction 10 crore, whichever is less. 14 or 10, whichever is less. So which is less? 14, sorry, 10, which is less 10. So what is the PGBP income? 10. For scientific research, the unamortized portion will be nil, obviously. So very simple, guys. Debited will be 10 crore. Forget about it. Next, when it is 14 crore is credited, that 14 crore is taxed into two heads. 4 crore is taxed as capital gain. Remaining 10 crore is taxed as PGBP. It is used in the business and then sold. When it is brought into the business, explanation 1 to 43.1 will come. When it is brought into the business, explanation 1 to 43.1 will come. Actual cost or deduction allowed. Basically, when it's bringing into business, what is actual cost of the asset should be taken minus deduction actually allowed. Come on, guys. Scientific research expenditure, 100% deduction is allowed. So what will be the actual cost? 10 crore minus deduction allowed 10 crore. What is the cost value? Nil. So though physically the asset is added to the block, what is the value of the asset added? 0. Should be taken as 0. Now it is used in the business, it is forming part of the block. Then when the block only is sold, asset is sold as forming as part of the block, or when the asset is sold separately, then the normal WDV block concept will come. 43.6 and section 50. If selling price of the asset is more than WDV of the block, right? So basically that asset was added at nil. So tomorrow all assets were sold off and this was the only asset remaining. And the value of the block was, let's say, 12 crore or something. All put together, all assets were there. All assets got sold, only this was the solitary asset remaining. This asset also they sold. The moment they sold this asset for, let's say, 13 crore, the difference, that is, selling price is 13 crore, WDV is 12 crore. Difference 1 crore will be section 50 STCG, short term capital gain. This we have seen in depreciation already. But if it was used earlier in the business, some asset was used in the business, after 4 or 5 years it is brought into scientific research. Then what the law was silent regarding that, but you have a case law, Sundaram Fasteners. In Sundaram Fasteners, they have told it will be WDV at the time of transfer, as if it was, what do you say? The WDV at the time of transfer into the business will be taken into account. Had an asset worth 5 crore. It was used for 3-4 years and the WDV of that asset as of today is 3 crore. 5 crore asset, 2 crore depreciation, 3 crore is the WDV as on today. 3 crore is transferred to business to do the business today. From the business it is to transfer to scientific research, right? So I'll again give an example so that it's clear for you. Hold on. So what did I say? 5 crore was the asset which was bought, let's say, in 2018. As of 2023, the WDV is 3 crore. Depreciation is 2 crore. Now, this was used in business. Now, this one you are bringing into scientific research. So, at what rate should I take a scientific research? Because in scientific research, I have to give a deduction under 35. Will I give a deduction of full 5 crore or will I give a deduction of 3 crore was the question. Sundaram Fastener said, sir, this 2 crore you have already taken depreciation. It's already debited to P&L account. Technically speaking, I cannot allow you to take 5 crore deduction again because 2 crore you have already taken. So logical conclusion is what? I have to take the remaining 3 crore as a deduction. Which means, what is my scientific research expenditure to be taken at the debit to the P&L account would be 3 CR. Original cost minus depreciation. That is what it says. WDV at the time of transfer is claimed as depreciation, 35.14. So, the selling of an asset, right? Here, next what they'll ask is, whether it is your telecommunication license under 35 ABA or whether it is a telecom operation of telecom license under 35 ABB, they will ask you what is the nature of expenditure. It should be a capital expenditure incurred for taking a right under 35 ABA. Under 35 ABB also capital expenditure for acquiring the telecom license and services. So in this case, fee which is paid before commencement of business, what is the amount that is deductible? Expenditure is allowed beginning with the previous year in which such business commences till the previous year in which such spectrum right expires. And fee is paid after the commencement of business, then it is allowed beginning with the previous year in which the spectrum fee is actually paid till such previous year in which spectrum right expires. Same here also. Let's take an example. And what will happen to when I sell off that right? What will happen when I sell off the right? M Limited purchased a telecommunication license for 10 lakh rupees. Life was 10 years. After commencing its business, payment for the same was made as follows: 2 lakh rupees upfront payment, 5 lakh rupees in the 4th year, 3 lakh rupees in the 9th year. So what are they telling here? Fee for right is paid before commencement of business, and after commencement of business, how much will it be? Previous year in which the spectrum fee is actually paid till such year in which the license expires. So upfront payment, how many years remain? 10 years. So this will be amortized over 10 years. 5 lakh was bought in the 4th year. So this will be amortized over remaining 6 years. 3 lakh, that is beginning from the year in which the spectrum fee is actually paid, 4th year, and the remaining time. 3 lakh was done in the 9th year. So how many years will you get? 9th and 10th year. So in this case, 2 lakh will be amortized over 10 years, 5 lakh will be amortized from 4th year onwards, and 3 lakh will be amortized over 9th and 10th year. So sale of right or sale of license. When entire right or license is transferred, right? When entire right or license is transferred, when sale proceeds is less than the unamortized amount, when the sale proceeds is less than the unamortized amount, balance shall be allowed as a year in the deduction in the year of transfer. Right? So let's say there was a license of 10 crore to be done over 5 years, every year 2 crore. 2 years are over. What is the amortized amount? 4 crore. What is the unamortized amount still? 6 crore. Now it is sold for 3 crore. This entire license is sold for 3 crore. Now you see, sale proceeds 3 crore is less than the unamortized amount 6 crore. What to do? Balance shall be allowed as a reduction in the year of transfer. I was supposed to debit 6 crore. In that I have recovered 3 crore. So what is the balance? 3 crore. This is debited in the year of transfer. When sale proceeds is more than the unamortized amount. What is the unamortized amount? 6. What are the sale proceeds? Assume sale proceeds would be 8. Least of the following shall be chargeable to income business year. 1. Sale price minus unamortized amount, or deduction allowed till date under this section. What is the sale price? 8. What is the unamortized amount? 6. What is the balance? 2. Balance is 2. Or deduction allowed under this section? 6. Whichever is less. Deduction allowed under this section till date, 4. Unamortized is 6, right? 4 is already allowed here. I told you in 10 years, 2 years already allowed, 4 crore. So what will I do here? Sale price minus unamortized amount. Sale price is 6 crore. minus unamortized amount is 4 crore. What is the balance? 2 crore. Basically, they're trying to tell if I had not sold at all, I would have fully debited 6 crore over the next 3 years. But since I have recovered 4 crore now out of it, remaining 2 crore I will debit. Either I will do this or whatever deduction is allowed till that 4 crore, whichever is less will be allowed to be debited. Here obviously it will be 2 crore. Suppose this instead of 8 crore, they sold it at 12 crore, mind you. 12 crore is more than the cost of the license only, 10 crore. So the balance 12 crore minus 10 crore, capital gains will arise on transfer of right only when sale price is more than the cost of acquisition, 12 minus 10. This is what we need to keep in mind. Similarly, if part amount is part license is transferred, same calculation you will do, but the balance will be allowed not in that year. Balance will be allowed in the remaining number of years in equal installment. So in this example, balance was 3 crore. No, same example here. If part of the license was sold, this 3 crore will be over remaining life of the asset. So in my example, 2 years only I had claimed the deduction. I still had 3 years to go. So 3 years I will get 3 crore divided by 3, 1 crore every year I will get. It's the only difference between part license sold and full license sold. Got it, guys? Same calculation for 35 ABA and 35 ABB. Same. Anyway, with example also is the same thing here. So that is with respect to scientific research expenditure, 35 ABB, ABA, and all those things. So let's move on, my dear friends, to deduction of capital expenditure on specified business. So guys, this is regarding specified business. There are only a few set of specified businesses with which you will get deduction. Mind you, the deduction here is purely on capital expenditure and not revenue expenditure. This is available to any SSE. And what is the amount allowed? Any amount that is debited to the P&L account with respect to the capital expenditure. Mind you, availing of deduction under 35 AD is optional. It is not mandatory. So if you don't want to do that, no problem. Because if you opt for 35 AD, then you will not get depreciation under section 32. So if you would rather claim depreciation, etc., and go with a reduced tax rate under 115 BAC and B, etc., then in that case, no need, BA and BAB, then there is no need for you to go under 35 AD. Hence, it is optional. And deduction allowed would be 100% in respect of any capital expenditure incurred by an SSE during the previous year for specified business, subject to the fulfillment of certain conditions. Expenditure which was incurred prior to commencement of specified business, yes, that also will be taken into account, shall be allowed in the year of commencement of such business, provided the amount would be capitalized in the books of accounts. So in your books of accounts, if you have capitalized that amount, which means what? If it's a capital expenditure, then in the tax books, the entire amount will be allowed in the year in which the business is commenced. So this will take care of all the capex just before the business and also after the business can be debited to the P&L account, my dear friends. Now, the important thing here is what will come under specified business. So we should remember things which are coming under specified business. First and foremost, setting up and operating a cold chain facility. So remember, cold chain facility, then warehousing facility for agricultural produce. Agricultural produce can be anything, guys. It can be your bark of the trees, it can be fruits, vegetables, it can be bee also, that is forest produce from bee. But though bee raising is written separately, earlier before that law came, agricultural produce included that as well. Everything, the byproducts also would be included, but generally it did not include sugarcane because sugarcane is just a byproduct of sugar. Sugar is a byproduct of sugarcane. So though growing of sugarcane is allowed under agricultural produce, manufacture of sugar was not in there in agricultural produce because manufacture of sugar is a byproduct of the agricultural produce. So there was a lot of confusion. Some people said it's included, some people said it's excluded. That's why separately to clear confusion, they have also added setting up and operating a warehousing facility for storage of sugar. Then hospital with at least 100 beds if you are constructing, building and operating. Yes. Developing of a housing project under affordable housing scheme. Yes, there also. Producing the fertilizers in India because of the organic farming, organic manure. Fertilizers also have taken a huge, step forward, a flip it has been given by the India, by the lawmaker. Laying and operating across country, either it's a natural gas, crude oil, petroleum oil pipeline, all these things also will be part of the same thing. Building and operating anywhere in India, my dear friends, a hotel, 2-star category or above. Then housing project for slum redevelopment, inland container depot, and yes, see, beekeeping and production of honey and bee wax. Earlier it was part of agricultural produce because of various cases which did not allow. Separately they have given here. And in all your calculators, mobiles, etc., they use this, semiconductor water fabrication chip. So manufacture of that chip also to buttress the Make in India campaign, yes. And then a political insertion whereby earlier it was only for these companies, but then Adani, Ambani, all these fellows also came and told, bro, even we want. Hence, and also your income-based, profit-based deductions under ATIA, AB, all these things were getting exhausted. So predominantly 35 AD, generally, if you see, let me just put up my CA final regular batches workbook. This workbook is like a one-stop shop. All the charts are there in this. So incentives is what I'll make you do in class in my regular batch. So incentives, investment linked incentives, 35 ADD. See, in regular batch will sit and do all the Bare Act analysis. Here in marathon, it is not possible, guys. Okay. So investment linked analysis, investment linked incentive is 35 AD, sorry. Whereas in profit linked incentive will be ATIA, ATID, ATIE, all these things. So investment linked incentive, 35 AD, capital expenditure fully allowed under section 35 AD. Land is not covered, goodwill is not covered, financial instrument is not covered, and any capital expenditure more than 10,000 rupees cash in a day to a person in a day, that is not covered. Revenue expenditure, everything will anyway be covered under 30 to 37. So 35 AD will not come, my dear friends, because everything is already covered under 30 to 37. Got it? So as I told you, conditions would be, of course, some of the conditions are what? It should be a new business and it should not be set up due to splitting up or reconstruction of business. So if, for example, ITC hives off to create ITC agricultural products, for example, of course, they have e-chopal where a lot of farming activities are being done. So if that portion is hived off, then you cannot say it is done due to setting up or reconstruction, and 35D will not be applicable for the same. Cannot be an asset which is transferred from non-specified business to specified asset. So basically, guys, you cannot create or you will not get a deduction for old assets. You will only get deduction for new assets, not for old assets. Only for new assets you will be getting. So what are the businesses? These are the businesses that I was talking about. For the new asset, which means you have to invest money and buy an own asset, only then you will get the deduction. Cold chain facility includes storage of transportation of agriculture and forest produce. What about meat and meat products? Yes. What about dairy products? Yes. Marine? Yes. Everything will come. Laying and operating a cross-country pipeline will also be, should be owned by an Indian company. So foreign company is not allowed, or it can be a consortium of Indian companies as well. Now, infrastructure facility, as I told you, the last point, which was actually inserted because of political pressure, or rather business, capitalistic pressure on politics, so to speak. So there it is what? Road including toll road, bridge, toll rail system, highway project including housing, water supply project, water treatment system, irrigation system, sanitation, sewerage, waste management, etc. And port, airport, inland waterway, and all these things. The benefit of 35 AD shall be extended to infrastructure facility business. If it is owned by a company, consortium of companies, board, corporation, same. It's state government owned or central government owned or jointly owned, it will be given for sure. Now, if I set up a 2-star hotel, but I cannot maintain it and I subsequently transfer it to somebody else without divesting the ownership, I will hold the ownership, but management portion I will give it to somebody else. Then also it will be deemed that I am carrying on the specified business, and hence it will be allowed for deduction. And as I told you, land is not covered, goodwill is not covered, financial instrument is not covered, capital expenditure, except this. And guys, we had seen any payment more than 10,000 rupees to a person in a day. If it is revenue expenditure, disallowed under 48.3. If it is capital expenditure, it is reduced from the actual cost under 43.1. If it is a capital expenditure of scientific business, that also is not allowed under 35 AD. So these three things we have to keep in mind. Right. So as I told you, coming back to our chart, yes, it should be new business, should not be set up due to splitting up, reconstruction, etc. of an old business. Cannot be an asset which is transferred from non-specified business to specified business, should be a new asset. But there are two exceptions to the new asset concept. Exception number 1, 35 AD 8D, which says old asset will be deemed to be a new asset if, first of all, should not have been used in India previously. Second, it should be imported from abroad. Third one, depreciation under Income Tax Act should never have been allowed before. So guys, even if it's an old asset, but if it's imported from outside India, then it will be taken as a new asset here. Logic I've discussed in regular batch. Here I don't have time. I'm sorry. Next, should not have been used in India previously. Guys, one difference between this and additional depreciation section 32(1)(2)(a. In additional depreciation, you will not get additional depreciation even if the machinery is imported from abroad. Even if it's a used machinery from abroad, never used in India, still you will not get deduction. But in this particular section, you will get deduction if it is used, if it was previously used abroad but imported into India. Exception number 2, 35 AD 8C, even if old asset is transferred to specified business, it is allowed. Even if I have an old business and from there I have transferred it here, it is allowed. However, the value of the plant which has been transferred must be less than or equal to 20% of the plant and machinery block of specified business. So basically, some other place I'm using the machinery 20 crore worth. Here there's already a asset worth 190 crore. Okay, in specified business I've already bought 90 crore, and some asset I'm using somewhere else, I'm bringing it to specified business. So when I bring it into specified business, 20 crore plus 90 crore will become 110 crore. Now 20 crore divided by 110 crore, what is the scene? 20 crore divided by 110 crore is definitely less than 20%. Hence, what will happen? Even if the old asset is transferred to specified business, no problem, it will be deemed to be a new asset, is what this section is telling. Okay, so let's come back to our notes. Same thing, usage of asset, yes. Cool, let's do it here only. Yeah, moving on. What is the treatment of 35 AD asset? Very, very important. Normal case, the 35 AD asset is retained for 8 years. Logic I have discussed in depth in regular batch. Why 8 years? And also the Fastrack premium batch. Here, no time. Sorry. So, retained, just remember, this is a revision. You already know, you already would have studied. So, it's just revision. So, normal case retained for 8 years. 35 AD 7A, it is retained for 8 years. Special case, what will happen? It is sold or transferred before 8 years. So, as per 35 AD, it says if it is held for 8 years, then no problem. But if it is held for less than 8 years, then some other treatment. One, you sell it after 8 years, what happens? Second one, you sell it before 8 years, what happens? All this can be given in the exam question, anything they can ask. If it is retained for 8 years, my dear friends, and then it is sold, if it is sold as a slump sale, since you have already taken the full amount as a debit to the P&L account, in a slump sale under section 50B, while computing the net worth, 35 AD will be taken as nil. In other cases, it is not transferred as slump sale, it is transferred normally. Still, explanation 13 to 43(1), you will still take it as nil because you have taken the full deduction in the P&L account. And 8 years are over. 8 years are over, you have taken the full deduction in the P&L account. Slump sale, it will not be taken in net worth calculation. Normal sale, if you do also, if you add it to the block, it will be taken as nil. The real issue arises if you sell it off before 8 years. If you sell it off before 8 years, you are not following the condition. Not following the condition means what? Now you will have to pay tax on that. Now two conditions there. If the asset is demolished, scrapped, transferred or destroyed. General rule, if the asset is transferred, we saw in telecom license, we saw in scientific research equipment, an asset is worth 10 crore, sold for 12 crore, 12 minus 10, 2 crore will be capital gain. Remember in scientific research, telecom license and all those things. 35 AB, 35 ABA and all those sections. ABB and all those sections. But here, different treatment. If it is demolished, scrapped, transferred and destroyed, no capital gain even if selling price is more than the cost of 35 AD asset. It's a big departure from the usual practice logic I've discussed in the class. So here 28.7 full amount will be PGBP, my dear friends. Full amount will be PGBP. Full amount will be PGBP. So asset worth 10 crore is used for my 35AD specified business. I used it only for 5 years and sold off the entire asset for 12 CR. What is PGBP? Full 12 CR is PGBP. Other cases, asset is used. In the first case, what happens? Before 8 years, it is demolished, scrapped, sold off, destroyed. Second is what? It is not demolished, it is not scrapped, it is not transferred, it is not destroyed. What do you do? You use it for non-specified business. So from cold chain facility, you will go for manufacture of paper. That is not covered in that. From cold storage facility, you will transfer to your factory where you manufacture food. Any food you manufacture some juice, etc. You need that cold storage facility to store your, fruits. So you transfer it off there, non-specified business. Then, my dear friends, basically my own business. So when I'm removing it, 3587B says I should take the actual cost minus depreciation from the beginning when it was brought. For example, if I brought an asset for 100 crore, I did not use it for 8 years. I used it for 6 years and then converted it to non-specified business. So I should take 100 crore minus depreciation for 6 years I should take. And whatever balance I get, that amount, since I am being used, that amount will be now PGBP. That amount will be PGBP. I have to pay tax as PGBP. So basically I had fully debited 100 crore. Now what I should do? 100 minus, let's say the depreciation is 70 crore. 100 minus 70, 30 crore will be my PGBP. Because 100 crore I have already debited, but as of today the value is 70 crore. So only 70 crore is allowed. Remaining 30 crore which was already debited before will be credited to the P&L account. That's the logic. On the other hand, when I am now bringing it into my non-specified business, I told you I am into some fruit punch and some fruit jam, etc. manufacturing. When I am bringing that asset into this, what rate will I record? Yes, I will record at the same rate, 30 crore, because I paid tax on 30 crore. I will bring it into my asset as 30 crore and chapter close. That's about it. Very important point. Very important point. If they ask you, when I'm calculating this depreciation, let us assume I have 100 crore asset. First year I will deduct 10. Just example I'm doing. 90. Next year I'll deduct 10. Just an example. Sorry, next year I deduct 9. 81. Next year I will deduct 8.1. 10%. Assume. Just an example. Now, this is, let's say, after this, some 74. 73 point something. Now, should I take this 73 as my PGBP? Yes. Will this be my actual cost also? Yes. So guys, depreciation I should charge, assuming it's new machinery. Now, interesting part. If it is See, producing fertilizers. Production of honey wax. Setting up fabrication manufacturing unit. If they ask these three things, my dear friends, and they tell you that for these three businesses, beekeeping, then that semi-fabrication unit, and also your fertilizer production, if they tell you, and after 3 years it is sold off, if they tell you, this will be the wrong answer, because since it is manufacture, mind you, and assuming it's a new asset, you also should give 20 additional depreciation here. This can be a very important MCQ question. So it should be 100 minus 10 minus 20, 70 minus 7, 63 minus 6.3, 56, 57. That will be the answer and not 73. Why? Because the law says you should take the actual cost minus depreciation, which you actually would have allowed if this was not to be a 35 AD asset. What would you have allowed if it was normal machinery? I will allow new old normal depreciation and additional depreciation. Think about it. Fist pump, come on. Yes, awesome. Got it, guys? Income tax, direct tax, very easy, guys. You just have to structure it in a beautiful way. That's all there is. Like this, if you neatly structure, nothing will happen. Since it's a marathon, everything I cannot do, guys. Whatever I can do to the best possible extent, we'll do. So, for example, PJ Hotels has a loss of 8 crore. Then PJ Classes, non-specified business, has a profit of 5 crore. Can the loss of 8 crore be set off against profit of non-specified business? Not possible as per 73 capital A. Next, PJ Hotels profit of 5 crore. PJ Beekeeping loss of 3 crore. Can a specified business loss be set off against specified business income? Yes. Third one, PJ Hotels specified business profit of 4 crore. PJ Classes not specified business loss of 2 crore. Can a profit of specified business be set off against the loss of non-specified business? It is not at all prohibited by section 73A, hence it is possible. What does 73A say? Specified business loss to be set off only against specified business profits. Nowhere it says specified business profits cannot be set off against non-specified business loss. Nowhere it says. So hence it can be set off, absolutely no problem. It can be set off. So that's about it. All these are normal skill development, agriculture extension. These are all normal stuff, guys. We'll not waste time doing all that. Now let us come to maintenance of accounts. I just put it up 1 second. Yes, guys, I opened the slide which spoke about 44AA. Okay, guys, maintenance of accounts. Okay, first one, specified person and non-specified person. Who's a specified person? He should be in the list as per B59 in my page number. What is the list? Medical, legal, film artist, accountancy, engineering, technical consultancy, company secretary, architecture, interior decorator. This should be the specified person. What are specified books? Specified books will be cash book, ledger, journal, copies of bill, original bills for expenses exceeding 50 and all those things. Limit, gross receipts greater than 1,50,000 in all three previous financial years. Greater than 1,50,000, greater than 1,50,000 in all the three preceding financial years. This will come. Then we have non-specified business, individual or HUF and others. Individual or HUF, income, if it is more than 2,50,000 or gross receipts more than 25 lakh at least, in 1 out of 3 preceding previous years. They should maintain the books of accounts. Again, guys, individual HUF, income greater than 2,50,000 or not and or gross receipts or turnover more than 25 lakh rupees in at least 1 out of 3 preceding previous years. Others, company, AOP, BOI, firm, etc., LLP, income greater than 1,20,000 or gross receipts or turnover greater than 10 lakh rupees. At least 1 out of 3 preceding previous years. At least 1 out of 3 preceding previous years. Only then they have to maintain the accounts. Then 44AB will come. That is your tax audit. Tax audit. Business turnover greater than 1 crore. Any business greater than 1 crore, they have to go for tax audit, but that 1 crore can be increased to 10 crore if 2 conditions are satisfied, which means the threshold limit from 1 crore will be increased to 10 crore if 2 conditions are satisfied. First condition, cash receipts less than or equal to 5% of the total receipts, and cash payment less than or equal to 5% of the total payments. So if cash receipts must be less than or equal to 5% of the total receipts and cash payment less than or equal to 5% of total payments. And then as far as profession is concerned, gross receipt if it's more than 50 lakh rupees, no cash receipt or payment condition, just gross receipt should be more than 50 lakh. That be the case, then this tax audit will come into the picture. Tax audit will come into the picture. Then there is an amendment in 23 that is not relevant for you, that we can leave. So guys, as I was telling you, payment to a single person in a day more than 10,000 in cash, capital expenditure 43.1 reduced from actual cost, revenue expenditure 48.3 disallowed, and then capital expenditure 35 AD also will not be allowed. So that was the scene. So that is regarding simple provisions of tax audit and books of accounts, so to speak. Now coming to the presumptive taxation. Presumptive taxation 44 AD. So guys, a resident individual or resident HUF or resident firm, but not a LLP, but not a LLP. So there are 3 sections for presumptive taxation for generally for residents, and one is also including non-resident there. 44 AD is for small business, 44 ADA is for profession, and 44 AE is for plying of goods carriages. Okay. Apart from that, we also have 44B, 44BB, and all those things, which we'll see shortly. So 44 ADA, how does it work? So 44 eligible SSC, a resident individual or resident HUF or resident firm, but not a LLP. This is applicable to resident individual, resident HUF, resident firm. Generally, in the Act, wherever I use the verb firm, even LLP is included, but here specifically they have excluded LLP. And you should have a eligible business. What is eligible business? Basically, eligible SSC, you should be any business other than 44A. Any business other than 44A will be eligible business. Right. So here, guys, any business whose gross receipts or gross turnover from such business does not exceed 2 crore rupees. So basically, this is for small businesses where the turnover is less than or equal to 2 crore. So a specified percentage of gross receipts shall be deemed to be the income from such business. What is specified percentage? Very simple. If it is received from account pay check, whatever amount that you're receiving should be from account pay check, account pay, bank draft, electronic clearing system, NEFT, BHIM, UPI, etc., then 6%. Other cases 8%. So if my turnover is, let's say, 1.5 crore, of which 1.4 crore I've received through bank, for that 6% minimum, remaining 10 lakh rupees, 8% minimum. You have to offer. You can offer more also if you want, but you cannot offer less. The SSC can claim a higher income than specified. If he is declaring a lower income, then he has to maintain books of accounts as per 44A and get them audited under 44AB. 44AD shall not apply to agency business, and 44A, that is your doctor, CA, engineer, because for him 44ADA will apply. And any commission business, if you are, it will not apply. And if you have availed any income-based deductions under 80H, 82, 80 RRB, it will not apply. And if you are engaged in the business of flying or leasing under 44 AE, then obviously it will not apply. So that is what it is. Section 3238 is already deemed to have been allowed, so you will not get further deduction again. WDV for the assets for the purpose of such business shall be calculated on the depreciation which has already been allowed. It's assumed like that. So, and one more interesting thing is, if you are an SSE under 44 AD, you don't have to pay advance tax on all the 4 installments. Only the last installment you have to pay the full advance tax on the last installment date, that is 15th March of every year. Otherwise, you have to pay 4 times a year. So there is one opt-in and opt-out scheme here under 44 AD, which is not available in 44 AD and any other thing. This opt-in scheme is what? Once you opt inside 44 AD, you cannot opt out for minimum 5 years. If you do so, if you break the law, or if you break, basically if you claim less or whatever it is without showing the books of accounts, whatever the case may be, you will not be eligible to claim the benefit for at least 5 years. So very simple. Once you come in, stay for minimum 5 years. Within 5 years, if you don't stay, if you do something where you need to get out, stay out for 5 years. That's the rule. Very, very simple. Because you have to get your books audited and all those things. So, for example, Mr. Karan here, assume that it is, cash receipts. That's why 8% I'm taking. If he is earning gross receipts 1.9 crore and income declared is 15,20,000, what is the amount offered under 4480? 8%. If the gross receipts is 1.8 crore and income declared by the SSE is 14,40,000, then that is also coming up to 8%, right? Then if it is 2 crore and he's offering 13 lakhs, then he's offering less here, 6.5%. It is less than 8%. So what I should do here, I should maintain the books of accounts. If I don't maintain the books of accounts, etc., then it will be a problem. That's what. And here if you see, Karan needs to maintain books of accounts, etc. Since he has not offered income as per the provisions of 44 AD in the 3rd year, he was not eligible to claim benefit of for 5 assessment years. That is from assessment year 21-22 to 25-26. He opted in first year. First year he was okay. Second year was okay. 3rd year he broke the rule. Since he broke the rule, 3rd year he's offered less income. He will not be there to be claiming the entire, he cannot claim 8% or he cannot get into the presumptive taxation scheme for the next 5 years. That is assessment year 21-22 to 25-26. An SSE is allowed to take benefit of 44 AD only when the gross receipts or turnover in the given year is up to 2 crore. However, in any given year, after declaring income under 44 AD, if the turnover goes beyond 2 crore, SSE cannot declare income under 44 AD. So now in this particular example, let us assume this year instead of 2 crore, that turnover only is some 5 crore. So now tell me, since it went beyond 2 crore, I cannot claim 44 AD. If I cannot claim 44 AD, will it be amounting to a breach? No, I did not commit any breach because I would have loved to do it under under the 44 AD, but my turnover went haywire. So will that opt-in, opt-out scheme will come into play if I wanted to come under 44 AD, but I could not come under 44 AD because there was a breach in the turnover. So if you see, in this case, it is not considered as violation under this section, and the SSE can claim benefit under 44 AD in the next year if the conditions in this section are satisfied. That is regarding 44 AD presumptive taxation. Next, moving on, 44 ADA. Eligible SSE will be a resident individual or resident HUF or resident firm but not an LLP. Eligible SSE carrying on business relating to 44 AA. That same, interior designer, doctor, etc., whose gross receipts do not exceed 50 lakh in the previous year can declare income of 50% of the gross receipts. So guys, here you can declare income how much? 50%. Where the SSE has claimed profits lower than that prescribed under 44 ADA, the SSE shall maintain the books of accounts as per 44 AA and get the same audited under 44 AB. Same thing, 32-38 will already be allowed. Next comes income from hiring or leasing goods carriages, 44 AE. So in this case, any SSE. Mind you, here it is any SSE. So they'll ask you, a foreign company wanted to get into plying of hiring or leasing goods carriages. You cannot write not applicable. This is for all SSEs. Important MCQ question. Here if you see, it is resident individual, resident HF, resident firm, but not LLP. If they give you resident LLP wants to do 44 ADA, not possible. Resident LLP wants to do 44 AD, not possible. Resident LLP wants to do 44 AE, possible. Foreign company wants to do 44 AE, possible. Here it is business of plying, hiring, leasing goods, owning not more than 10 goods carriages. Sir, I own 8 goods carriages, but I have taken 3 on hire purchase. Even if I have taken 3 on hire purchase, it will be called as deemed to be owning. So here in this 44 AE, it is not based on the income that you have earned actually. It is based on the gross vehicle or unladen weight of the vehicle, to be honest. So 1000 per ton of the gross vehicle weight or unladen weight for heavy goods vehicle, 7500 for other than heavy goods vehicle should be taken into account. Heavy goods vehicle means, if you see here, what do you mean by heavy goods vehicle? Means gross weight will be 12,000 kgs. 12,000 kgs. So if you see, and basically it should be bought even if it's one time a year. If it is bought, it is fine. So for example, here if you see, any time, basically you should not cross 10 at any point of time during the year. Mr. J has bought 2 vehicles which weigh 7,000 kgs on 5/4/22 and 2 vehicles which weigh 17,000 kg on 37/22. In this case, income under section 44A shall be calculated as follows. 2 vehicles purchased on 5/4/22, 2 vehicles into 7,500 into 12. Why? Because it was bought on 5/4/22. Part of the month also will be considered fully, so 12 months. Remaining 2 vehicles purchased on 37. Though it is purchased on 37, it will be considered as full month. Correct? So that's what it is. It is month or a part of the month. So July, August, September, October, November, December, January, February, March, 9 months. So 2 vehicles into 1000 into 17 tons into 9 months. Total income will be this. Now this or whatever if he can maintain books, if it is less, then it is less. That's how we should see. Where the SC declares a lower income than the income prescribed under section shall maintain books of accounts as per 44AE and 44AB is what they say. Now guys, this is a very, very important chart. So immediately now this particular chart will be given to you. Right, this particular chart will be given to you and I will be discussing around for 35-40 minutes about this chart. This chart can come in MCQs. All the interconnecting sections charts for 44 AAB will immediately follow this particular video right now. Okay, so you watch that video. After that we will do something else. Okay, watch that video now, right after this continuation of the video. Okay.